Hey, what's up, AJT fam? Welcome back to another Trader's Mindset segment. Today, we're going to talk about the art of taking a loss. And believe it or not, up until yesterday, I did not have this as part of my Trader Mindset program. And I don't know why, because this is really significant in terms of developing the right mindset and all of that. So this is going to add another week to our program, and then once we finish, I'll take a week off, and then we'll start this all over again. We'll have a new evolution. Some things will be updated, but I don't want you guys to miss out on this. So if going through it again helps you, that's fine. But you do have the videos of all of the live presentations. You do have the PDF where you could take notes on them and all that. Especially the second time around, you have the PDF already. But just we want to get prepared for that. So first, let's kind of review what we talked about last week. We talked about patience, and how our level of how our level of patience and self-discipline is crucial in this. And I also, share with you that I believe that patience, when you look at it as an emotional tool, you divide it into two elements: the new trader patience and experienced professional trader patience. And actually, when we start looking at the art of taking a loss, we're going to look at it from the new trader perspective and the experienced trader perspective as well. But patience really divides into two. The beginner trader patience, it's all about resilience. Okay, and you'll see today, why that resilience is important. And we use the diet analogy. How when you're starting a diet, how hard it is to stick to a particular way of eating. When I was first diagnosed with type 2 diabetes, I had to change my diet. I love bread. I love cornbread. I love all kind of bread. I love pancakes. I love waffles. I mean, there was so much that I had to get out. I love rice. I had to change, and it was very difficult. But it took resilience. So it reminds me of how these foolish dieters take the easy way out. They'll get their stomach stapled or whatever, trying to take some drug. Like for me, I'm like, if I take this diabetes medicine, I can just eat what I want, but not thinking about what the medicine is doing to my body. So the smartest thing to do is to control it with diet and not have to pump all this poison into my body. It only makes sense. So am I learning anything by taking this bad medicine? Is it teaching me anything? No. Is it teaching the people who need to change their diet or who are trying to lose weight by them taking all of these shortcuts? It's not teaching them anything. So, we have to understand that this is a process, and we have to be patient and resilient, through all of this. And again, today's lesson is going to kind of piggyback on that. So, of course, they're not learning anything. But what I want to reiterate is being patient is not hopeless for you. It requires ideas to solve the problem and sticking to your improvement plan. These are the plans when we do one-on-one sessions. These are the plans that we should be working on. Okay, it's not just me telling you stuff. You have to do the work. You have to put in and the work so that you could tell me, hey, this is what I'm dealing with. These are the issues I'm dealing with. And then we could come up with a plan together to help you work through it. It's not your willpower in real time holding you back. It's the process. The process that you have to develop. Okay, that's holding you back. The lack of your process or having one to help you deal with your patients. So, that's what we talked about last week. All right, so let's move into the art of taking a loss. So every trader should know by now. If you don't, you better learn quick that losses are part of the trading process. Now, there are good losses and bad losses, and we'll talk about that here in a minute. But how do you feel if you stop out and the stock continues to oppose your initial position? I don't know why I've got opposite, but it should be opposed. Sorry about that. I gotta change that. This is gonna drive me crazy. Okay, your initial position, you feel great, right? It's like, man, I made the right decision and everything. You feel great. Now, what if you get out and the stock immediately turns around after you stop out and move into your direction? You get pissed. And that causes you to make mistakes. So if you were in the live trading classroom this morning, you saw me take Meta. You saw Meta stop me out. You saw me take a bad entry, number one. That's what screwed everything up. So that was a bad loss because I made a mistake. But I get out, and what happened? It turned around and started going in the direction that I wanted it to go to start with. Okay, but if I had got pissed, do you think I would have been able to make that trade and do well in it? No. And actually make money. Eliminate the initial loss from the bad entry and actually make money. So these are the emotions that we have to control. Feeling great after that, if you don't control it, it can actually mess you up as well. So you got to control both emotions. So I know that sounds familiar because that's how your emotions work against you in the market. You cannot fall into that trap. Okay, don't fall into that trap. That's another one of those trading traps that we talk about. All right. So let me say this loud and clear. If you don't understand it and you haven't learned it by now, losses are part of trading. Okay, losses are part of trading, period. Those people that spend their whole brief trading careers trying to eliminate loss altogether die broke and miserable, because that's where you're going to end up. But to deal with this, you have to adopt a new mindset. That's the trader's mindset. That's what we're doing in this program. What we've done over the last couple of months is to build a new trader's mindset. Contrary to popular belief, trading is a business. And every business has expenses that will reduce your profit. Okay, you cannot run a business without expenses. I don't give a damn what they tell you on YouTube. You cannot run a business without expenses. Even if you run an online business, you got an expense of the network. You got an expense of your website and all of this stuff. There are expenses. Okay, you can't run it without an expense. Therefore, trading losses are our business expense. Just like the platform fees we pay or any other fees that we pay connected to our trading, it is a business expense. Okay, we've got to get that through our thick skulls that our losses are a business expense. All right, so naturally, as a business owner, we want to keep our expenses down, okay, so that we can make more profit. So for me, I mean, even though it wasn't a big deal, I cut out at least $400 of my expenses. You know, I don't have a live option scanner anymore. I realized how I could work without it. I didn't need it. I don't need a live scanner. I don't need a live stock scanner. That's damn near $400 right there. You know, I didn't need all of that. I didn't need to pay all of this extra money for Earnings Whispers when they have a free component that tells me everything I need to know. Because I'm not looking at it for an investment. I'm looking at earnings for that particular day and day trading. And that information wasn't there. So I could eliminate a lot of my expenses. That's what we did. But you must learn from your mistakes. I know that sounds familiar because we talk about it all the time. Learning from your mistakes. The best traders learn from their losses. They learn how to assess their losses and gain the valuable experience needed to move forward. Through journaling and reflection, it's truly an art form. Okay, and I'm going to go through the art form next week. That is what our session is on next week. And I'm going to give you, I like to keep things simple. I'm going to give you a simple way to assess your trading, your losses, and how to learn from them. Okay, it's not about eliminating all of your losses. But let's look at this for a minute. Let's look at the sport of tennis. Now, I read this in an article a little while back, and I thought it was really interesting. And I'm just now figuring out how I can incorporate this into my presentation. But in professional tennis, about 80% of the points are won. That's a professional playing tennis. In amateur tennis or beginners, about 80% of the points are lost. Professional tennis is a winner's game. The final outcome is determined by the activities of the winner. 100% what the decisions they make on the court, all of that has determined how many or what percentage of the points they win. Just like a trader, professional trader, all of their wins are won. And the beginners, most of their points are lost. Alright, so amateur tennis, again, is a loser's game. The final outcome is determined by the activities of the loser. And I'm going to tell you right now, beginning trading is a loser's game. You know that. That's something that you had to accept coming in. Beginning trading is a loser's game. You will lose because you have to go through and make the mistakes for yourself. You're not going to believe everything that we tell you that's trying to teach you. you're not going to believe it. You're not going to believe it until it knocks your ass out. And then you're going to say, oh yeah, now I know what he was talking about. All right, so amateur tennis is like a beginning trader. You know, the mistakes you make are going to determine the outcome of your game. All right, beginning tennis players lose because they make most of the mistakes. So their mindset at that point should be just to get the ball back over the net and let their opponent, who is likely an amateur as well, make the mistakes. Most of the errors that they make are unforced, meaning the opponent didn't put them in a position to lose a point. They did based on their lack of skill and patience. All right, think about this. Think about it. I'm sure you're starting to relate this to trading right now. I'm sure if not, I'm going to help you relate it here in a few. But most of these errors are unforced, meaning they're making the mistake. Their opponent is not hitting a shot that's putting them in jeopardy. They're actually just making the mistakes. Unforced errors. Okay, amateur tennis players make the transition to advanced and professionals by learning how to first eliminate those unforced errors and then learning how to read their opponent's weaknesses and attacking them. Once they've eliminated the unforced errors and they're able to read their opponent's weaknesses and successfully attack them, they have the professional mindset. Okay, keep thinking. How does this relate to trading? I think you figured it out by now. Okay, I think you figured it out by now. The amateur tennis players, just like the beginning trader, full of unforced errors. And we've covered all of these unforced errors in this program over the last couple of months. We've covered all of them. We talked about them. We talked about how you can recover from them and eliminate them. So to advance in our trading, we have to learn how to eliminate them, which is another thing that we've been covering, like I said. So instead of focusing on ways to win all the time, our focus needs to be on ways not to lose. Focusing on the errors that we're making them and turning those errors into positives. They've been blowing up my phone. It's my wife and my kids. I'm sorry, it just keeps dinging and they just keep going and going. But and I don't know how to turn. Oh, okay, I'm gonna do this. I know what I'm gonna do. All right, so we've covered everything that you need. Everything that you need. And the way we focus on our unforced errors is to know how to assess them and how to come up with ways to correct those things. That's what we do in our one-on-one mentor sessions. I teach you how to assess it for yourself, what you feel, because you're the only one that knows how you feel and what triggers you. And once you're able to determine these things, what's triggering you to make these unforced errors, then we could work on developing a plan to deal with those triggers, eliminate those unforced errors. And by that way, we're eliminating your business expenses. So you're going to make more money. Because in trading, as we said before, the only way you make money is your winners have to pay for your losers first, and then whatever's after that is your profit. And if your winners never pay for your losers, then you'll never make a profit. So we have to focus on ways, on our unforced errors first. And then we can start executing and doing the things that we can do to make money in our trading. So again, this will take a new way of thinking, a new mindset. That's what I call the trader's mindset. You know, I started this journey over 10 years ago, developing the trader's mindset, understanding, because of all the doggone psychology graduate courses we had to take as a teacher, I figured it out. And it's about eliminating mistakes and inverse thinking. Meaning, instead of looking at ways to win, you study the most common ways we lose. The most common unforced errors. Like jumping in trades too early, anticipating, unrealistic expectations, greed. You know, all of these things are common ways to lose, and they create unforced errors. All right, so we talked about good losses versus bad losses in the beginning. So the good losses, these are the losses that are taken as planned, meaning you know when the trade tells you it's time to take the trade off, it's not working, that's a good loss. Okay, and it's done according to your trading plan. That's a good loss. All right, you were prepared for it and you reacted to it. So this is an acceptable business expense. These are things that are normal. It's not abnormal for you to take good losses. I mean, even if you execute it right, it had the perfect setup, but it just didn't follow through, that's a good loss. All right. Bad losses are the ones that you take out of greed, fear, or panic as you deviate from your trading plan. It may be a result of impulse trading driven by the fear of missing out, FOMO. We all know FOMO. So jumping impulsively into a trade and just weathering the initial pullbacks until the pain was too much and stopping out in panic. You know, sounds familiar. And some of you do that following me because my stops are wider. You jump in and you weather a couple pullbacks and you just can't stand the pain and you take it off, and then the trade ends up working and I make, you know, good money on it. You're not pissed at yourself, you're pissed at me. All right, but this is a problem. And it's actually an unforced error because nobody's making you take it off. Nobody's making you do anything. It's just an unforced error. Because if you took the trade and you didn't establish where your max pain is going to be, it's going to hurt you. And there's certain stocks like Tesla, Nvidia, and Netflix that make really volatile pullbacks or bounces at times. And you got to be prepared for that going into the trade. The traditional ways to come up with your stop loss and all that stuff doesn't really work on these. You know, and I've explained it over and over and over again what the deal is with these. And if you can't deal with these stocks, don't trade them. There's a lot of other stocks. Meta typically trades pretty good. Microsoft typically trades pretty good. There are other stocks that typically trade within reason. But getting back to this, this typically happens to everybody at some point, even me. This morning I made a bad trade. This morning I had to, help my son with something. It took longer than I thought. I didn't get here and log in until after 9:30. And so when I jumped in Meta, I made a mistake. I entered when I wasn't supposed to because I didn't go through my full process. And then there are times when I have bad losses. Nvidia has given me some pretty bad losses. I've been able to recover from them, but because I get my head screwed on straight and I don't make unforced errors anymore. The key is to recognize and learn from them. In fact, bad losses can become some of the most valuable lessons because they're the most painful types of losses. How many of you guys have experienced pain like you've never experienced in the market? How many of you are willing to raise your hand and say that? It happens. Pain is a great teacher if you would only listen to it. You lost 20K in Forex. That's why I don't trade that Forex. Pain is a great teacher if you only listen to it. You gotta listen to it. Pain is trying to teach you something. When you grab something and it's really hot and it burns your hand, didn't you learn not to touch the damn thing again? Yeah. Pain is a great teacher. If you kick a cement block and it busts your leg, your foot, your toes, are you gonna kick it again when you get mad? No, you're gonna find something soft to kick. Pain is a great teacher. Just gotta listen to it. So let's take that pain that we feel from the market and listen to it, guys. So the key takeaway here is every loss presents a lesson. Okay? And next week's session is going to be about how to learn from each one of your losses. I'm going to give you a process to go through and assess your losses. Now, you've already got my reflection sheet where you've got a go, no-go checklist that'll help you determine whether your trade's good or bad. But I'm going to help you go a little bit deeper into determining, how to learn from these unforced errors and how to move on when you take a good loss. All right? So when you take a loss, it's human nature to grade the loss based on what happened to the stock after you got out. Meaning, it doesn't matter if you stopped out according to your plan. If the trade turns around and works again and goes in the way you want it to, you're grading that trade based on that. To you, that's a bad trade because you missed out on profit, right? It's just natural for you to think that way. But it's a natural part of this learning process. You've got to flip the script. Okay, you got to flip it. Okay, we don't grade the loss based on what happened after the trade. We base it on what did we do inside the trade. That's what the grade is. Did we enter when we were supposed to? Did we take profit when we were supposed to? Did we get out when we were supposed to? Not what happens after the fact. Okay. So the quality of your loss does not depend on what the stock does after you get out. It doesn't. So don't think that. All it takes is to determine whether it was a good or bad loss. If it was a bad loss, we're going to learn from it. If it was a good loss, you did your job. Keep it up. All right. Get in the habit of learning from losses. All right. And like I said, next week we're going to pick up here and we're going to get you in the habit of not being upset when you take losses. Not being upset when you're on a losing streak. Okay. That's killer. So I'm going to show you an example real quick from today. Show you an example from today of Meta Alright, so let's look at Meta here. This was my initial entry on Meta. Look at what happened. I bought it into the 20 and the 50-day moving average. What? Dumb. Yeah, it was breaking out. Breaking out over the pre-market high and everything. What? So I didn't get mad. I realized I made the mistake. This was an unforced error that I created on myself because I came and tried to jump in a trade because I was late getting in. Okay, 100% completely my fault. Then I took a break. I walked away for a minute, got my head squared away, and I got in once we confirmed taking out these daily moving averages. We did get a pullback, and kind of hung around there for a minute, but ended up taking profit, and then it pulls back and stops me out, at my first target. I do that after I take profit twice. My first profit target's going to be, my final target's going to be where my first target was. If I let it stay on, I would have let it come all the way back and it would have stopped me out at break even. And I would have lost this profit here that I locked in. So it did bounce like everything else and took off, but I traded Tesla. But just to show you what could happen if you let a bad loss get into your head. If you don't know how to address it and move on from it, I could have destroyed this. I could have got back in, and then when it started to pull back, got out. I'd have just been mad and not executed properly. All right, so are there any questions from today's presentation? I think I got it pretty straightforward. The horizontal orange line, you talking about this line here? Yeah, that's another daily moving average. I think this is the 5-day moving average. It's actually red, but it looks orange. I think that's the 5-day moving average. Yeah, 5-day. Yeah, it's from the daily chart. So if you look, okay, here's my daily chart right here. These are the daily moving averages. So what I do is I transfer them over here. and see $300.17. Well, it's up to $300.42 now. But when I got in the trade, this is where the 5-day moving average was. You know, these are dynamic. They will adjust throughout the day. So if you get in another trade basing it on these levels, you need to go back and adjust. And they're basically color coded the same as the moving averages on the intraday chart, so I don't get confused. Yeah, I manually do it. I like to manually mark my trades because it tends to burn it into my mind better. If everything is automatic, it makes my mind lazy, and I tend to screw up more. So I try to keep my mind to exercise throughout the day. All right, any more questions? I'm gonna stop the recording here, but I want you guys to understand this is a key component. It's a key component. Everybody has trouble accepting losses, accepting losing streaks. So make sure you tune in next week. And I'm going to give you some, strategies and process on how to deal with it. All good? Well, some of them are sending direct messages for some reason. So it's not going out to everybody else. It's just coming directly to me. Yes, next Thursday, right here in the live trading chat room. Next Thursday at 11:30. I pushed it 30 minutes later today because we had, I had a issue and I was kind of 30 minutes late getting started today. So yes, next Thursday.